Hello traders and welcome to another video review. Today is Friday, the last day of the month of June, the end of the quarter and end of the half of the year, the first half of the year of 2024. So it might be quite interesting to take a look at some higher time frame. But first, let's take a look what's going on the economic calendar. Overnight data were in form of the Japanese data releases in form of the Core CPI, industrial production, and the jobs application ratio. This is the mixed bag of data. Apparently, one that it's quite significant is the industrial production beats the expectations of 2% with the actual number of 2.8%. Current account in the UK extends to minus 21 billion pound. We are still waiting for the other data from the UK. GDP in the UK is at the level of 0.7%, and we are still waiting for the CPI data from the Eurozone, from the France, from Spain, of course, from the Germany as well, together with the German unemployment rate. Right now it's 5.9%. The Eurozone summit starts at noon together with the Eurogroup meetings, and then of course we jump straight on to the New York session. Core PCE price index and personal spending data are scheduled for release at 2:30 together with the Canadian GDP, which is, by the way, expected to increase from 0% to 0.3%. Chicago PMI data is scheduled for release at quarter to 4 o'clock, and at 4 o'clock we got the Michigan inflation expectations and the Michigan consumer sentiment data. Atlanta Fed GDP now data is scheduled for release at 4:30, and at 5 o'clock we got the Fed monetary policy report. 1 hour later, FOMC member Bowman will give a speech. So pretty busy end of the day, week, quarter, and the year on financial markets. So it's worth to take a look at some charts. We are going to start with euro dollar. The euro dollar time frame chart is behaving exactly as we expected. We are going up and down in this narrow triangle. I have marked this triangle here with this black lines. You can see that these black lines are located just above the level of 1.0665 for the lower one, and somewhere around 1.0763 for the upper one, and we expect this market to break to the upside when this triangle is finished. It might get a little bit narrower. For example, it might get a little bit like this, so we might have some sort of the wedge here being formed just under the key trend line. Nevertheless, it's still a very nice indication of a possible movement to the upside. What are the technical resistances? So the newest data show that the technical resistances are 1.2727. Let me just copy this line and mark the other one, 1.2762. So those are the technical resistances just below the major supply zone. The outlook remains horizontal, maybe a little bit skewed to the upside because we are waiting for this triangle to be completed, or wedge to be completed. Nevertheless, any breakout below 1.0668 or 1.0652 is bearish and immediately invalidates this scenario. How about the gold data after the yesterday's US data and just before today's US data? So what do we have here? We have a trend line, of course. We used to have this channel, very nice channel, but there was a fake breakout. We went back to the channel, then we tested the trend line, then we go down as we broke out of the channel with a low at 2293. Then we went up again to test the channel lower level, and now we are just in between, very particular place, just between the lower channel line, trend line, and in between two moving averages. So what to do from here is a very good question, because it looks like the market doesn't have any idea where it wants to go. However, one clue comes with the channel breakout. This channel has been violated, the channel has been broken. So did it want to do this, something like that, but I just want to raise this one. There you go. Okay, better not to touch it. And that might means that the bears are in charge of this market. However, you can see we are bouncing from the extremely oversold market conditions on a 4-hour chart. Now we are above the level of 50, so there is a little bit bullish bias on the gold market. We will see how it is going to work later on the day after the US data are published. Gold and the crude oil, of course. Let's take a look at the crude oil. Why? Because we are testing the upper range of this, the upper level of this range. The level is 82.48, local high 82.31, so it's like us 17 pips away from the high. We tested the 80.26 dollars level 1, 2, 3, 4, 5 times already, so that's well established technical support. The market is still above the 100 periods moving average on the 4-hour time frame chart, and the momentum is strong and positive. So that all means the market will try to break to the upside above 82.48. The next target eventually, if we break above this level, is located at 84.43. So this is the target, immediate target for the crude oil. One more market here, S&P 500. As you can see, we are still following our 1, 2, 3, 4, 5 impulsive cycle. Now we want to see something like a correction. So from the highs of this level towards the lows, possibly we will see some sort of the correction to the downside. The simple correction is of course the ABC, and for now everything looks quite in favor of our scenario. We got some deterioration towards 5,442. The market keeps being rejected from the 50 periods moving average, so maybe this is the top for the wave B forming here. And then of course we can go lower to test the 100 periods moving average right now at 55,393, and just above the key technical support levels. So if there is some situation that we will eventually move lower, this might be development of the wave C on the S&P 500. And last but not least, let's take a look at some Bitcoin. Let's take a look at some cryptocurrency. There is a very particular pattern here on the Bitcoin 4-hour time frame chart. We got the ABC to the upside as a bounce, and as you can see, we quite significantly bounced from the recent low. So let me just add some line here, and this recent low was made at 60,651. Oh no, there's one more lower one, 60,567. So this level will act as the immediate technical support, and maybe this is the low for the wave B, just maybe. It looks like a solid low for the wave B. We still wait for the wave C to be developed to the upside and break above the 63,333 level. Momentum is hovering just below the level of 50. So if we break above the level of 50, that might be the development of the wave C. Now I will just change this. That would be the trend line right now, so I will just change it to this color, and I will just remove this one because it's not longer necessary. This is how the trend line looks like. Okay, let me just mark it black because we already have the orange trend line. There you go. Black trend line will be a cap sorry, it will be a lead for the rally, eventual rally to the upside. So please keep an eye on this trend line. It's very close to the 100 periods moving average as well. So it's a very interesting situation here on the Bitcoin. If there is more than 3 waves to the upside, like 4 and 5, of course, that's the indication that the market is right now trying to resume the uptrend by making first impulsive wave to the upside. But we will see how this one will eventually develop. Right now, intraday technical support 60,567, intraday technical resistance 62,481. We need to break above or below one of these levels. The preferred structure, the preferred market scenario is to the upside, at least in the short term. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.